Welcome to the Jacobs Levy Equity Management Center for Quantitative Finance Financial Research Spring Forum. My name is Chris Geczy. I'm the academic director for the center, and it's my pleasure to host today's event. The center's mission is to leverage the research strengths of the Wharton School to increase understanding, or as we might say, move the needle over the theoretical and practical aspects of quantitative finance. Today's presenters have made strong contribution to this field through their research and through their practice, and we look forward to learning not only from them, but from each of you throughout our conversations today. The Center and the Wharton Jacobs Levy Prize for Quantitative Financial Innovation were established in 2011 through a generous gift from Bruce Jacobs and Ken Levy. Quantitative finance provides a remarkable tool to the investment industry that, when harnessed and appropriately applied, has the potential to generate tremendous value. The Wharton School intends to stay at the forefront of research and scholarship in this important field. On that note, this morning we'll recognize the recipients of the 2014 Jacobs Levy Center Research Paper Prizes. These awards, open both to faculty and graduate students for outstanding papers, are chosen from the center's working papers and include a non-inconsequential cash emolument. Just the sort of distinction to motivate a finance scholar. And our benefactors will be announcing the winners. Now may I introduce the chair of the Jacobs Levy Center Advisory Board, who's also principal and co-founder of Jacobs Levy Equity Management, Bruce Jacobs.
Good morning, everyone. Under Chris's leadership, the Jacobs Levy Center continues to thrive and fulfill its mission of advancing innovation in quantitative finance and fostering the application of quantitative methods and techniques. All of us here today are engaged in the same mission. Ken and I have devoted over 25 years to quantitative research and portfolio management at Jacobs Levy Equity Management. Our firm focuses on active management of U.S. equity portfolios. Much of our effort has been directed toward discovering and exploiting factors that have the potential to offer better than market returns. Our early research, published in the Financial Analyst Journal in 1988, disentangled the payoffs to stock market anomalies, stock price behaviors that were anomalous in the context of the prevailing efficient market hypothesis. Our findings reveal a much greater dimensionality to the stock market than suggested by the one-factor capital asset pricing model. At that time, the one factor was beta. Any returns in excess of those attributable to beta were considered alpha. A lot has happened to alpha and beta since then. Researchers have uncovered hundreds of potential alpha factors. Market-neutral long-short portfolios were developed that can separate alpha from beta. And alpha has been transported to other asset types. Most recently, and notably, some alpha factors are now called beta factors, and smart beta has been born. It is believed that these beta factors are persistent and can be harvested. Estimates of smart beta assets under management range from 400 billion to 1 trillion. There is little doubt that smart beta products are dramatically altering factor investing. Our speakers will explore a variety of questions about factors. Which ones matter? How many are there? Why do they work? How to exploit them? Will they become crowded trades? Will they last? Brian Kelly proposes a risk factor, common idiosyncratic volatility, or CIV beta, that is correlated with household income risk and is priced in equity markets. Cam Harvey provides a cautionary note about the proliferation of factors. He introduces a new method to identify those factors that are not just due to chance. Our luncheon speaker, Cliff Asness, tells us how to make the size factor work. This afternoon, Veneer Bhansali shows us that trend and carry have predictive ability across a variety of markets. And our two panels, comprised of asset owners, consultants, and investment managers, will discuss the use of factors in investment practice. Before we begin the program, I'll turn it over to Ken for the presentation of this year's Jacobs Levy Center Research Paper Prizes.
Thanks, Bruce. In 2014, the Jacobs Levy Center established the Research Paper Prizes to recognize outstanding scholarship in quantitative financial research. Winners are chosen from recent submissions to the Center's Working Paper Series. Outstanding papers are awarded cash prizes of $5,000, and the best paper receives a $10,000 prize. We would like to announce the winning papers now, and afterwards, we will invite all the prize recipients who are here to step up and receive their awards. An outstanding paper prize goes to Gil Segal, Ivan Shalyastovich, and Amir Yaron, all of the Wharton School. Their paper, Good and Bad Uncertainty, Macroeconomic and Financial Market Implications, decomposes macroeconomic uncertainty into good and bad volatility, each of which contribute positively to risk premia, but in different ways. Another outstanding paper prize goes to Peter Feldhutter and Christian Heyerdahl Larsen of the London Business School, and Philippe Ildovich of the Wharton School. Their paper, Risk Premia, Volatilities, and Sharp Ratios in a Nonlinear Term Structure Model, introduces a nonlinear approach to modeling treasury bonds and shows that the yield curve can reveal more information than previously thought about expected returns. And finally, the top prize for best paper is awarded to Luboš Pastor of the University of Chicago Booth School, Rob Stambaugh and Luke Taylor of the Wharton School. Their paper, Scale and Skill in Active Management, finds strong evidence that as the size of the mutual fund industry increases, it becomes increasingly difficult for individual funds to beat their benchmarks. They also find that the active management industry has become more skilled over time. And now we would like to invite all the prize recipients who are here to join us on the podium to accept your awards. Congratulations.
Great. Congratulations again. Congratulations to our Research Paper Prize recipients, and thank you again, Bruce and Ken, for your leadership in making them possible. For those of you who are interested in the research papers you just heard a bit about, and to see a strong group of papers focusing on quant finance, please do visit the center website, jacobslevycenter.wharton.upenn.edu, available also in your packet, and of course by searching Jacobs Levy Center at Wharton on the web. Under my time as academic director at the center, and that of our managing director, Lauren McDonnell, our board of directors, and of course our benefactors, we hope to continue to support the research of our faculty members, those in the quant community and students, and to broaden the plenum that we have established in which academic and industry researchers in quant finance, our students, practitioners, asset owners, consultants, managers, regulators, and stakeholders can share their work and questions.